Good Friday afternoon to you. Welcome to the Jon Sanchez Show on News Talk 780 KOH. It's a pleasure to be with you and a pleasure to be with my partner, Mr. Jason Gaunt. And it's a pleasure that it's Friday and we have essentially 53 minutes left in our workday, approximately. Yeah, maybe add a little another half hour to that to clean up. And it's the weekend,
Mop,
my friend.
vacuum.
Yeah, mop, vacuum,
empty garbage,
clean toilets, windows. Yeah, we did it all.
Yep, did those, but yeah.
Goodness. Happy $5 trillion notional value day too. Option expiration day.
Yeah, we were talking about that earlier, right? The notional being because of options and futures, right? You don't take $1 and have $1 of exposure on an option. Options have leverage to them. So if your $1 of options really controls $5 of stock, it could have been $1 trillion of ultimately dollars that were exposed, but the notional value is 5x. So yeah, number keeps getting bigger and bigger. There's a lot of people playing in the options market.
I think this was, so what we're jumped way ahead. I apologize, folks. So first of all, welcome. What we're talking about is volatility in the market today. Goldman Sachs came out yesterday and said, all right, basically buckle your seatbelts because Friday, meaning today, they're estimating about $5.1 trillion of notional value of options expiring. Today was quadruple witching day. This is the simultaneous expiration of index and stock options, et cetera. So what it does is just creates a significant amount of volatility, and boy, did we have it. And, luckily we ended up in the green pretty nicely across the major averages, but now Jason, again, was giving this great explanation that really there was $1 trillion, which is, you think about it, Jay, that's pretty staggering. It just shows, I think, we don't know if there were calls, puts. I'm sure it was obviously it was a combination due to the volatility in the market. But to your point, there's a lot of hedging going on in the market, right? And you and I were just looking at a chart a second ago about the CDSs, the credit default swaps against Oracle, and that massive chart, up going the opposite direction of what the stock did this week. So there's just a lot of hedging going on, and CDS we can kind of throw into that hedging category. So continue on now. That was a great explanation.
Yeah, and there was also some. We talked on Wednesday about some chart patterns that looked a little toppy. Bank of America had their contrarian sell signal that got triggered today, which shows that investors are not extreme, but we'll call it an 8.5 out of 10 bullish, which remember that is contrarian. When everyone's excited, you want to be not excited. And on the flip side, when everyone's afraid, we talked about Oracle, right? For example.
Yes.
Where couldn't get any more negative, and then you get any sort of positive news and credit default swaps that are wicked levered, and you get reversals. Like that's what you want to look for.
And just happened in the last 2 days of Oracle.
And that's what Bank of America was saying. They said since 2000, and I'm taking this from our friends over at Market Ear, 16 sell signals have been followed by a median 7% decline in global stocks over 2 months, with a 63% hit rate, meaning 2/3 of the time this comes true. And on average, when you get this type of a signal going back to 2002, you see an average decline of 2.7%. So something to be paying attention to.
I don't know what time period that is, though.
It's just saying since 2002.
No, but I mean
over 2 months.
Over 2 months, okay.
Yep. So the 2 months.
I was going to say that
signal.
That would be, I mean, it's no one's call. It's just mathematics is where they're deriving this from, but very unusual coming into historically some of the strongest time periods of the year in the market, meaning last couple of weeks of December, you get into the same thing with January. So yeah, so I feel better now and believe that a little bit more if you go out further. So we're talking mid-February roughly,
Max drawdowns, which means from the high to the low, typically reach 4% after 1 month, 6% after 2 months, and 9% after 3 months, while upside typically stays below 2%. So it's essentially saying when people are excessively bullish, it often will pay to be a contrarian.
Does it say when that report, what period that's through?
2002.
No, I mean, when did they do the survey?
So it's always going. It's always going. This bull bear survey just looks at a lot of different sentiment indicators.
Yeah, I'm just wondering, is this through today, through this week or so? Because I would be surprised if there was that amount of bullishness. Let's say if the survey was through this last week.
Yeah, no, that's
you know
true.
what I'm saying?
Yeah. So probably maybe, I don't know, maybe end of last week, probably.
Yeah. So
A little bit of
Interesting.
bullishness came out given the markets were choppy and ugly earlier. So
Yes.
yeah, I see what you're saying.
Yeah. Yep. Exactly. Well, again, folks, we're going to be talking about the week on Wall Street as we do each and every Friday. Kind of give you an overview of what we saw happen this week, try to prepare you for the holiday shortened week next week. And then we're going to get into, at the bottom of the hour, we're going to get into a topic we attempted to get to on Wednesday, but we were not able to because that situation with Oracle we felt was much more important. But this is also very important. It's going to be really dedicated to those of you that are small business owners. Here we are, December the 19th. You still, believe it or not, you still have some time to do what we're going to be talking about. Last minute tax moves, year-end strategies for every small business owner. And Jason, this is such a busy time period for everybody, especially business owners. Obviously, if they're into any type of a retail business, they're extremely busy, I hope. But folks, you can literally take just a couple hours out of your schedule and do some very effective tax planning that we will go over with you that potentially could save you thousands, if not hundreds of thousands of dollars. You still have time to do it. So hopefully you'll listen closely. If you miss it, or a business owner that's not able to listen to the show today, tell them to go listen to our podcast. Be available by 5 o'clock or so tonight on YouTube or Spotify, etc., or on YouTube, on. So we got Spotify, we've got YouTube, and iTunes. That's right, the one where most
iTunes,
people
yeah.
listen. There you go. Minor detail. You excuse the brain fog here. It's been a long week. All right. With that said, my friend, I'm going to turn it over to you. Let's go through a brief market recap on this $5 trillion notional option expiration day.
Yeah, I'd say that clearly was a big part of it. As I mentioned, even though it was a lot of volume today, and I expect that there'll be a large sucking sound as far as the markets are concerned towards the Christmas tree. Now that volumes will be pretty quiet next week, especially post OPEX. Volatility that happens is going to be the B and C teams on the field into year end is the expectation. News flow will be pretty light as well. Mentioned Oracle was strong today, right? There were some comments out that a group of investors, including Oracle, are going to get access to the U.S. part of TikTok. And that was a positive for the stock. And also Michigan regulators approved a request from DTE Energy to power an Oracle and OpenAI data center. So that helped the space.
There's that story back again, right?
Yeah, that at least shows momentum that it's not going the other direction. That you saw NVIDIA was up close to 4% today. Micron up 7% on good numbers. The tailwinds for semis was there. Yeah, Micron, that's one that Micron, Western Digital, Seagate just completely missed. You looked and you're like, wow, why didn't I think of that? All of the storage needs for AI on laptops and computers and all that, that people are going to need more memory to crank through a lot of this as well. So yeah, those things have been moonshots. Carnival Cruises had good numbers today.
Before you go to Carnival, I want to hit these exact numbers on those three stocks you just mentioned, because these are significant moves. And this is, by the way, so let's just real quick, Jason, let's focus on Micron, right? This was really the catalyst, because we had Micron earnings come out. I can't remember if it was pre-market yesterday or after hours on Wednesday. Okay. Because the stock ripped today, right? $17.37 gains. Jason said 7% gain, 6.99 to be exact, 265.92. But this is on top of yesterday's huge move, which, yesterday Micron shot up $23.03, 10.21% to 248.50. Now, I'm going to mention SanDisk and Seagate, which yesterday were up $12.63 on SanDisk. Seagate Tech up about $14.35. Now, listen to those gains again today. SanDisk up $18.15 today, 8.27%. So, Jason, I mean, you're talking 25, 30% gain on some of these just in the last two trading sessions, to your point. But those are significant moves. And to me, this tone of this market really changed yesterday when the market opened up, or even in the pre-market when you started to see Micron take off. I think that was that one catalyst that you and I always talk about. You can always have a catalyst either on the upside, like a Micron, or a downside like Oracle, that are kind of viewed as market leaders in respective areas, semiconductors or whatever it may be. And literally, folks, that's all it takes to turn an entire market around. And I really, tip my hat to Micron, Jason, for pulling us out of the doldrums, because on Wednesday when you and I were doing the show together, it was not looking pretty after that big sell-off in Oracle, which again was the downside drag.
Yeah, and we're very range bound in the market, even back to September, have chopped around in a while. It feels like a wild range. It's a pretty tight range. And until we break higher or break lower, you're just going to see a lot of volatility in between. It's those who think it's too early for the AI trade to bust, which I'm in that camp. It just we haven't seen enough yet to prove or disprove the trillions of dollars of spending that's expected over the next several years. But you're also at very high altitude in terms of earnings and profitability. So it gives a lot of ammo for the bears. And that's typically what you tend to see when stock markets are chopping like they are.
Yes. Bad day for the home builders. We had KB Homes. They came out came out with the earnings report that was not good. Remember, this is on top of Lennar's earlier in the week. Well, they didn't ask any questions there. You had KB Homes down 8.57%, a $5.38 loss. DR Horton was down about 2 3/4, $4.23. That affected home builders home supply stores like Lowe's down $7.25. So that was another weak area there. But like you were saying, cruise lines up, pretty nice on that Norwegian move. 6.5% you said? So pretty good. Overall, folks, here's where we sit. Looking still good. NASDAQ for the year is up 20.7. S&P's up 16.2. Russell 2000 up 13.4. And the Dow is higher by 13.1. All right, a few more things we want to hit when we come back. Tell you where these markets finished and some of the commodity and interest rate side. Then we'll get into our topic, last minute tax moves for the small business owner. Let's turn it over to Kristen Snow in the Right Now Traffic Center. Hello, Kristen. Welcome back to the Jon Sanchez Show on Newstalk 780 KOH. Happy Friday to all of you, joined by Jason Gaunt, of course. So we finished as follows in this volatile $5 trillion notional value option expiration day. I've been wanting to say that all day, Jason. I'm glad we're able to talk about it. 183-point gain on the Dow is how we finished up, 48,134, 0.38%. NASDAQ rose 301 points, 1.31% to 23,307. S&P a 60-point gain, 0.88% to closing at 6,834. On the commodity side, rose 57 cents on oil, 56.55 a barrel, $22.80 gain on gold, 4,387.10, up 4 basis points on the 10-year Treasury to a yield close of 1.5%. All right, my friend, anything else you want to add to today's market action before we kind of take more of a macro view?
No, I'm ready to go.
Ready to go? All right, let's talk drugs, bro. You ready? Pharmaceutical drugs I'm talking about.
Yes, of course.
Big news coming out of the White House today. Many of you will be smiling after I tell you the big news. White House confirmed that they signed 9 new agreements with major pharmaceutical companies to lower prescription drug prices for Americans in line with the lowest prices paid by other developed nations. Now, here's the 9. Okay, in case you buy your prescriptions from any of these companies. The 9 manufacturers include Amgen, Bristol-Myers Squibb, Boehringer, Genentech, Gilead Sciences, GSK, Merck, Novartis, and Sanofi. Now, what the agreements are is they reduce prices on drugs that treat numerous costly and chronic conditions, including 2 types of diabetes, rheumatoid arthritis, multiple sclerosis, asthma, chronic obstructive pulmonary disease, hepatitis B and C, human immunodeficiency virus, meaning HIV, and certain cancers, among others. Now, the agreement will provide every state Medicaid program in the country access to the MFN drug prices on products made by the 9 companies, resulting in billions of dollars of savings and continuing, according to the president. Trump's historic efforts to strengthen the program for the most vulnerable. The agreements ensure foreign nations can no longer use price controls to free ride on American innovations by guaranteeing MFN prices on all new innovative medicines and 9 companies bring in the market. Let's see, there was one part I wanted to mention. Amgen's going to reduce the price of its cholesterol-lowering Repatha from $573 to $239 for patients purchasing through. Take a guess, Jason, where you have to buy these drugs through to get this break.
Maybe them directly?
Trump RX. Did you know he created his own?
Speaking of Trump RX, you see DJT's merging with like a fusion company?
I can't figure that one out for the life of me.
It's been like, what were they? Crypto company. And then
no, they're a media company.
Social part, right? Exactly. Whatever they're supposed to be.
Then
and
crypto.
Now they're a fusion company.
Yeah.
So just like a conglomerate of some kind.
I'm not even sure what fusion energy is, but
it's when you smash things together and they become other things. But hey, at least we got most favored nation status with our drugs. So we got that going for us.
There you go. I'm glad we could do that. But you got to buy it through Trump RX. Okay. So If you buy your pharmaceuticals through BMY, Bristol Myers Squibb, they're going to reduce the price of the HIV medication, Taz, from $1,449 to $217 for patients purchasing directly through Trump RX. Let's see, what are some more common ones? Let's see. Oh, GSX. They're going to reduce the price for the inhaler. Popular asthma inhaler, Advair, that's a popular one, will fall from $265 down to $89 if you buy it through Trump RX. Let's see. There's another one I wanted to mention. Oh, yeah, this is a popular one from Sanofi. They're going to reduce the price of the blood thinner Plavix from $756, Jason, to $16 for patients purchasing directly through Trump RX.
That's pretty good.
And then Sanofi is going to list its insulin products at Trump RX for $35 a month. Major savings.
It is
savings.
It definitely is.
Major.
And that's been a screw job for a long time of, where the prices overseas were so much lower. Theoretically, we were, U.S. consumers were subsidizing.
That's right.
Overseas buyers.
And what was amazing that Jason and I were talking about during the break is why we didn't see the aforementioned 9 companies go down in value today. I mean, Amgen was up $3.15. Roche was up, let's see, about $1.11. Gilead up $3.30. I mean, all 9 were up, various amounts, of course. But that was interesting. Usually, when you get involved in these type of programs, if you're the company, your stock goes down. So not sure on that one, but hey, you know what? Good for them. Did I ever tell you what I used to have to do with my love of my life, my lab that passed away, Buck? He ended up getting, so he died. Gosh, what was it? What's it been? Yeah. 5 years ago, something like that, right? You met Buck many times.
I did.
And just a most sweetheart of a dog, my best friend by all means. And he ended up getting diabetes towards the end of his life. I remember having to go to Walmart and buying the insulin. It was like $99 for a vial that, I don't know what it lasted, a week, 2 weeks, something like that. I'm like, my God, I can't. And that's, again, the dog's version. I can't imagine what people were paying. And we know that we've seen insulin prices come down even before today's announcement. What diabetics, what they've had to pay. I've heard just horror stories, hundreds and hundreds of dollars a month. So, hey, anytime you can save some money on stuff like that, I wonder if you could use Good RX with the Trump RX to get an additional discount. Huh?
I like
there
it.
You go.
Smart.
There you go. That's
arbitrage,
right.
hedging.
Arbitrage, baby. Are you teaching me well how to negotiate? All right. Any final things you want to wrap up before we take this break and come back and start talking about some small business strategies?
I am looking forward to talking about small business strategies. Let's put this week behind us.
Amen, brother. Let's do it. Let's turn it over to Jack Saban, News, Traffic, and Weather. Welcome back to the Jon Sanchez Show on News Talk 780 KOH. Happy Friday to all of you. Joined, of course, by my partner, Jason Gaunt. 183 gained on the Dow today, up 301, and the S&P 500 gained 59. All right, you small business owners, let's get into some strategies for you. It's the 19th of December. You, believe it or not, still have some time, but you better start hustling. Jason, I want to start off. I'll take the first one. Maximizing, let's both do it because it's both our area of expertise. Maximizing retirement contributions. Okay. Now, as you listen to some of our podcasts on Apple Podcasts, I got chewed out by our producer. It's no longer Apple or iTunes. It's Apple Podcasts. So forgive me. Mm-hmm. But as you've heard on many of our podcasts and on this show, many retirement plans for small business owners can be created and funded up until the time that you file your federal tax return. A lot of business owners don't know that. They think, oh my God, December 31st, I don't have the money to open the retirement account to fund it, to reduce my taxable income, so I'm not going to do it. Not true. Jason, as you said, what's the simple cutoff time?
Tax day, right? We've got even as far as you. Oh, I apologize. So to open a simple, most firms are looking for you to have it done by the end of October. Exactly. Right? Because you need to contribute to it during the tax year. Right. Certainly the employees, if they're doing it, do.
And frankly, folks, I can't tell you the last time, Jason, I've seen a simple IRA. I mean, there's some lingering, but I haven't opened one in, I don't know, 10, 15
People have been using
them. I hate them.
Yeah, people have been using them just a little bit more now because of the new requirements, right?
Mm-hmm.
Needing to have a plan in place for employees, et cetera. Yes. It's an
regulation
easy thing to get set up.
Yeah.
We've seen.
We need to do a show on that probably next week, by the way. Remind me on that one. Nevada has mandated, along with many other states, that if certain criteria is met, which majority of you are going to fall into, you have to offer a retirement plan for your employees. If not, Nevada, I'll tell you, Nevada's very gracious as usual with a, what's the word I want to look for? A grace period, I'll call it a grace period, right? Where, okay, they're going to give you a little bit more time than the cutoff without hitting you with penalties. California has, here's the penalty. If you don't have the plan set up, here comes the penalty, or here comes, the penalties. Again, we'll do a show on it but you business owners, this is one of your big responsibilities. Again, it came out in July and Nevada was approved or became effective. So we'll do a show on that next week and go through it. But anyways, back to the retirement contribution side, Jason. So what Jason and I are going to tell you about now is one of our favorite retirement plans. We offer 401ks. We set up 401ks for many businesses. 401ks are great, but generally, again, you want to have, at least 3 to 5 employees in most cases to make a 401k worthwhile, right? So for those of you out there that are single, business, or you have a spouse involved in your business, this next plan we're going to talk about is one of our absolute favorites. And I should give you a little preface here. We don't have the time today to go through all of the contribution limits, et cetera. If you want to learn more about them, please call us at 800-775-800-1801. Or you always want to get the blessing of your CPA before you do a retirement plan also. But what we're going to get to is the solo 401k. This is one of my absolute favorite plans. Again, we're not going to get into the contribution limits. But the reason being, we like to set these up. Again, you only want to be a single person business or your spouse. Do not set one of these up if you have employees. No. Matter of fact, you can't. So let's say you're a one man or one woman business and you have your spouse involved. Okay. So the amount of money, I'll just put it this way. Again, I'm going to put some caveats here. You can go, if you do it correctly, up to $70,000, depending upon your age and a few other criteria, up to $70,000 you can contribute pre-tax. Each of you, again, if you have a husband and wife, significant. So you're talking, north of $100,000. Okay. But here's the real beauty about it. You don't have to set up the solo 401k until you file your federal tax return. So even if you go on extension till October 15th, you can file or you can fund that literally on October 15th if you want to. No one's going to do that. But the bottom line is you have plenty of time to save up. So when you get your 25 taxes done, it looks like there's a big tax liability. That is a great option that you can do. You can also do the same thing with a SEP IRA. The reason Jason and I like the solos over the SEP IRAs, SEPs get very expensive if you have employees, because whatever you as the business owner have to put in, you got to do the same percentage for your employees, right? Solo 401k, we said no employees, right? But here's the other major advantage. So Jason and I were strategizing as we always do, and we want to share just an idea with you. Solo 401ks. Advantage over the SEP IRA is this. You can borrow against your solo 401k balance. Jason's going, yep. So let's go over that, Jason. Once again, just like a normal 401k, you can borrow up to $50,000 or 50% of your value, whichever is less. So if you had $200,000 in your solo 401k, you can only borrow $50,000. If you had $60,000 in your solo, you can only borrow 50% or $30,000. So look at it, the max you can borrow is $50,000. Pretty significant.
Yeah, no, it really, really is. And the flexibility is nice to have.
You bet.
Go through paying yourself back, right? It doesn't technically cost you anything. You're just reimbursing yourself as you're paying back the borrow over a period of time.
Yeah. Let's expand on that. So just like your 401k, with your solo, you can borrow, again, as Jason just said, and pay yourself back. So here's the pluses and minuses of doing a loan against your solo 401k. So let's say you take out the $50,000. Whomever you have that account with, whoever the custodian is, they're going to quote you an interest rate, right? And they fluctuate, based upon where interest rates are in the marketplace. Right now you're looking roughly about 8%. It's prime plus usually 1.5 to 2 points. So let's call it, for argument's sake, 8%. Well, guess what, folks? To Jason's point, you're paying yourself back that 8%.
Correct.
Wait a minute. I can borrow money. Doesn't go on my credit. There's no qualifying. There's no nothing. And I'm paying myself back a guaranteed 8%. Not bad. Okay. Now, you can do whatever you want with that $50,000 in this example. Of course, what you want to do, either you're going to pay off liabilities that exceed the 8% the money's costing you, but most likely, hopefully, you're going to invest it. Take it away on that side of it.
Yeah, I mean, again, if you have something that you know has a higher than 8% hit rate, right? That's your bogey, is your cost for borrowing, right? Because to John's point, there's no interest cost, there's no taxing you on that payback. You're paying back $8 for every 100 that you borrow out of the account each year, and that just goes back. And typically anywhere from 3 to 5 year payback period is what people use it for.
After tax dollars.
Yeah, I mean, ultimately you want to identify an investment of some kind that you think is going to yield better than that, but it certainly is a way to get access to capital for sure.
So let's say you take that 50,000. Let's say you want to. We'll do two scenarios. Let's do a real estate one. So let's say you take that 50,000. You're like, and I've done this a lot over the years with real estate professionals, because usually they're just a one-person business. So they take that 50,000, Jason. They go put it as a down payment on an investment property, right? Okay, so $500,000 property, 10% down. There's your 50 grand. Hopefully, if things go well, they're going to get cash flow from that rental property. They're going to get some tax advantages, and hopefully they get appreciation. So that investment over time most likely should make them cash flow, should give them tax advantages, and should make them money and appreciation, all off of that 50,000 that you borrowed from yourself and you're paying that 8% interest back to. So you're basically you're leveraging is a better word. I was going to say doubling, but you're leveraging your own money, right? Instead of it sitting in the SEP IRA, and of course or in the solo, of course you want it invested, but you could pull it out, pay yourself the 8%, go invest it in real estate, or go invest it in a business, or go invest it in the stock market, whatever you want to do. And hopefully that rate of return is something substantial. But it's Jason, it's almost, and I hate to say this, it's almost a no-lose situation. I got to be very careful compliance-wise saying that, but just from the standpoint is, if you're confident in your investment, again, you're using your own money to go do that. Really, you're leveraging your own money to go make that investment. Most likely, if you do it right, you're going to make money over the long term in that investment. And again, you're paying yourself back this hypothetical 8%, so on and so forth. So again, if you have you and your spouse, guess what? Now you got $100,000 available. You get the point. It's it's really, really leveraging a retirement account tremendously. And again, you can take that, since it's a loan, you can take that money and go do anything, but just take our advice, invest that money. Don't go blow it or pay off high interest debt, but don't just blow that money. Don't go buy a travel trailer or something like that. It's not really the idea there. But in the meantime, that solo 401k can be invested into anything, right? It can be invested into the stock market. And it's something Jason and I have been working very diligently on, that we will be announcing in more detail in 2026, is the self-directed IRA, where we will show you, we will be able to do it for you, how to invest something like a solo, a SEP, a traditional IRA, an IRA rollover, a Roth, a mega Roth, whatever you want to call any of these retirement accounts, how we're going to show you how you can invest those into things outside the scope of normal Wall Street investments. So that program will be coming your way in 2026. So bottom line, Jason, you can maximize those retirement contributions, reduce that taxable income. Remember, whatever you put in that solo, you're not paying income tax on that. So great tax reduction strategy for 2025. Have all the way until you file the tax return to fund it. Let's wrap it up with Kristen Snow right now, Traffic Center. Welcome back to the Jon Sanchez Show on News Talk 780 KOH. All right, we're going through, by no means can we get to our entire list of the end of the year tax strategies for the small business owner. If you want a copy of this list, by the way, just send us an email at, are we going info or are we going office?
Office always. Info no longer exists. Always
right.
Office. Yep.
I can't keep up with you guys. Yeah. Office at sanchezgaunt.com. Then get you this list. It's a really great list that we put together. All right, Jason, let's talk about fun one, entity structure checkup, right? This is another great thing to be doing this time of year. LLC, S corporation, C corporation, so on and so forth. So I'll tell you what Jason and I started doing a few years ago, and it's, from a tax perspective, it's really worked out well. And we'll give full credit to our CPA for this. He had us, go from an LLC to being taxed as a sub S corporation. And the reason for that is, but I tell you, it's resulted in a very nice tax savings, to be honest with you, is Jason and I draw a salary up to the Social Security limit under the S corporation. And then we take the rest of our distributions, as sometimes they're structured as a draw dividend. I mean, there's a lot of different ways. Yeah, the accountant can do it. But by setting yourself up as an S corporation, even if you're an LLC, you can take that Social Security wage. And what's great about it is you're not paying your 15% self-employment tax on that Social Security on that W-2 wage. the where we at in our max, Jace? 177 some change right now.
For this year, and then it goes next year to 184,500. Yeah, 176.1 for 25, and then 184,500 next year is Social Security wage base.
So bottom line, you small business owners, if you're taking everything as a draw, you're paying 15% self-employment tax, right? So instead, restructure it. Again, get this buy-in by your accountant. Restructure it. Let's say you take 300,000 out of the business to where you're, for next year, you're taking the 180 plus out as a W-2 wage and omitting the 15% self-employment tax, and you're funding your Social Security, right? You're gonna want that down the road, and
401k, all those
401k, exactly. There's a whole bunch of benefits. So that's not really an end of the year thing, but it's something to be thinking about very seriously for 2026. Okay. Here's another one that's always missed, Jason. I like to remember this one. Hire family members, but do it strategically, right? So I did this when my kids were younger. Now they're older and they still work for me. How do you go figure that one? But you can consider, and again, talk to your accountant. Most of them will say, if the child's, I've seen as low as 9 years old, but kind of typical is like 11, 12 years old. Employ the children, employ your spouses, and what you do is let's forget the spouse side of it. That's too complicated, but employ the children, right? So what you can do in many cases is your child can make a certain amount of income per year and not pay any income tax on there. So what you're doing, it's a shifting. So you're taking money that normally you would have paid your child, just as an allowance, or you're just giving them money. Now you're paying them 100% tax free, and it's coming out of your personal income, right? So if you're in the 37% bracket, let's say you're shifting whatever, $1,000 over to little Johnny, because little Johnny cleans your office or maybe washes your company truck or whatever the case is. Little Johnny's not paying any money on that, whatever that threshold is. The limit escapes me right now, but you're shifting money around. But what you got to do, though, be very careful. This can be an audit flag. And what you want to do, you want to make sure that you are paying a fair wage, right? You're not going to pay little Johnny, $30,000 a year or $300 an hour to wash your truck. Your
very good
truck.
At washing cars.
Very good. Yep, exactly. And have it very detailed. It's like a regular employee. Write down what their hours are, what work they did, and again, look at it just like a legitimate employee. But it's a great strategy, especially if you have a lot of kids, to shift income from your high bracket down to their very, very low bracket.
Even to help them fund Roth IRAs legitimately, right?
Took the words out of my mouth. That's right. Remember, it doesn't matter what your age are, folks. If your kids have earned income, which in this case they would be, guess what? Put that money into a Roth IRA for them, and they're going to really thank you when they're ready to retire. So just one of the many things we can do for you at Sanchez Gaunt. Give us a call. Check us out online. We'll do it all. And most importantly, have a great weekend. Thanks for letting us be a part of your life this week. Jason, take the weekend off. Have a great time. God bless everybody. We'll see you on Monday on the Jon Sanchez Show, News Talk 70.
Jon Sanchez is a registered investment advisor, and the opinions expressed by Sanchez Gaunt Capital Management, LLC on this show are their own and do not reflect the opinions of News Talk 780 or its parent company, Cumulus Media. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance.